Welcome to FX Options University, recorded live at the International Securities Exchange, the world's largest equity options exchange. Join the industry's top trading professionals as they provide insight and strategies for trading in the currency markets using FX options. FX options are a low-risk alternative to hedging currency moves in any market condition.
Welcome, this is Steve Meizinger, your host, and today I'll be the presenter, talking about why currencies matter for investment portfolios. A special time tonight, starting at 7 o'clock p.m. Normally we start these at 4:30, and normally we do Tuesdays. That's our regularly scheduled day, except on the vacation weeks where we have Monday. We usually go Wednesday then. But thought I would deliver this material, and I hope you guys all enjoy it. I mean, it's really important to understand that currencies do matter, and that you can mitigate risk using currency options. I'll be talking about that. I'll spend about 40 minutes or so, 45 minutes, going through the slides, and then I'll take your questions. And we had a busy day today in the ISE currency options. As I go through the numbers, the Australian dollar was really active. AUM was active. AUX was extremely active. CDD was somewhat active. The euro not so much as compared to as it's been, but a little bit. British pound traded a little, although it was much more active last week. Japanese yen, we didn't see much activity at all, really. So again, I want to thank you for attending. Excuse me, and hope that you really enjoy the presentation, why currencies matter for investment portfolios. Great place to learn options, other than the FX option site, which is everything pertaining to options as it relates to currencies, is at, well, of course, fxoptions.com, but the other site is optionseducation.org. You could learn basic options there, and I urge you to read characteristics and risks of standardized options. So really a great primer on the options, not only a primer, but actually goes into some significant detail about how options, of course, have risk. You need to understand that risk prior to entering any kind of options transactions. So today I won't be including taxes, margin, and commission, although those are very important factors when you are considering any options transaction. Taxes, margin, and commission, very important. All right, so let's get started. Options. Options are available on many different asset classes. So you can trade them on ETFs, you can trade them on equities, equity index, and today we'll be focusing on currency options. And the currency option at the ISE is just a cash-settled option. It's very straightforward, actually. But I'll get more to that in just a brief moment. So what is currency trading? Well, you can trade currencies in a lot of different ways. You can do currency trading with spot trading. That's just cash, and you have to have a spot account. We at the ISE are trading options, though, so that's the options is where you would be able to, as long as you had an account open with an equity options broker such as Options Express, E-Trade, Ameritrade, Interactive Brokers, TradeStation. There are so many brokers out there. No matter which one, Trade King, you can trade your view of the currencies, whether you want to hedge or not. So let's just take a step back and talk about what is money. Let's just go from a basic finance course or an economics class. What is money? Well, it's a medium of exchange, the unit of account, and it's a store of value. Of course, that's the last part of it is sort of it's open to debate each day. How great a store of value a certain currency might be, and that's really what trading is all about. How is it used? Well, we use it for trade, investment, savings, and speculation. So a lot of times people get caught up in saying, oh, it's a speculative product. But you know what? Currencies are used for many different things, as I just said, trade, investment, savings, and speculation. I'll give you a couple of fundamental FX factors. Again, this is not a complete list. There might be some economic factors such as monetary and fiscal policies, government budget deficits and surpluses, balance of trade, inflation, economic growth. I mean, even today, where all of a sudden the Chinese say that they're going to loosen the peg between the yuan and the dollar, well, that had a huge effect early in the morning. And then although people took a different view later in the day. So fundamental factors, they do matter. But, you know, as you get into economics, it's up to you to decide what the importance is. Political conditions, market psychology, and ultimately supply and demand drive the markets. When you're trading any kind of asset, really what you're looking at is risk appetite versus risk aversion. So this morning, I turned my computer on and see, of course, the Chinese were loosening their peg. In fact, we knew that yesterday. What did it mean? Well, for many experts, they believe that there was going to be, well, I guess a momentum shift towards risk appetite, and that's what we saw early in the morning today, people buying riskier assets. But later in the day, people actually changed their minds. The traders reevaluated. So you might want to think about trading based on the idea of risk aversion versus risk appetite. All of us prefer higher rates of return, but we need to think about the potential risk of devaluation. So you might find a currency that yields a higher amount, whether it's the Aussie dollar, Brazilian real, whatever. But again, that rate of return is not guaranteed because, again, there's potential for devaluation. Of course, it could actually grow in value also, but according to finance textbooks, currency textbooks, there is a term called interest rate differential, which assumes that if one currency has a much higher interest rate, that currency is likely to devalue over a certain period of time. Not guaranteed, though. Let's go through some currency lingo. We have many different things that we, if you read the FX Options site where we have a lot of articles, I've written many. We also have educational pieces from different authors. They might talk about the U.S. dollar strength or weakness, risk appetite versus risk aversion. I went through that with the carry trade, liquidity, currency flows, balancing trade, quantitative easing, central bank intervention. Another one that we hear recently is austerity versus overproduction. So theoretically, at least over the long term, you should have balanced trade. If you don't, you might have devaluation. And so that's why we're struggling with in the currency markets each and every day. But again, this gives us great opportunities to trade, and the ISE FX options allow you to trade your view. And if you buy an option, you have limited risk, or you can trade spreads. You can do numerous different strategies.
Thank you for participating in this week's session. Please join us again next week. Get trading ideas, exchange rates, webinars, news, and commentary. Visit www.fxoptions.com. ISE FX options can be easily traded through all options-enabled brokerage accounts. These exchange-listed securities are cash-settled in U.S. dollars and have a European-style exercise.